well, I guess since I kind of prompted risks, let's talk about China risks, Alibaba risks, because that seems to be the big thing on everyone's mind. Um, Naturally, I suppose, with China and the regulatory environment in China, but also outside of China. What are other countries going to do? Like the US potentially delisting Chinese stocks. That's been floating around for a while. Nothing's really come of it, but it's significant. I don't know how you weigh that risk, but let's just say a delisting did occur in the US. Is that a major concern long term? That tensions between China and the US? The US has a very healthy, uh, liquid equities market that would inevitably, I'd guess, prop up most stocks that make their way into it. Is that a major concern long term if you're looking to buy into Alibaba, or do you not really care and just see it as an opportunity to buy more?
I think I kind of take Ray Dalio's perspective on this. So on his LinkedIn, probably about a week ago now, he made some commentary around China and the risks involved with the CCP. He's kind of looking at this time period as just a short-term blip, but when you zoom out a little bit and go over the longer term, he even mentions like a 40-year time period. They've actually been really moving towards becoming a free market capitalist society where these entrepreneur type people can thrive in China. And if you're looking over the past 6 months or you're looking at the headlines of the news right now, that certainly doesn't seem to be the case. It's just kind of really hammering down on some of these anti-free market decisions, like with the DD listing and things like that come across. And that's really why we're seeing a huge drop in share price. I think Barber's down about 35 or 40% since its all-time high, or maybe not quite that much, 10 cents around the same. The Chinese market in general, if you're looking at any China ETF, it would be down about the same. But I think if we're looking longer term, this is not the trend that China is having. They seem to be supporting these companies. And really, it's what's moving them out of being what was a third world country into a more developed market at the moment. So I would find it pretty hard to believe that the CCP would completely ruin such a huge part of their GDP. I think Alibaba alone is about 2% of China's GDP. So to completely destroy that would be pretty insane in my mind.
I think the delisting might actually be a positive, like if it ever happens, because suppose they do get delisted, right? A lot of the funds in the US would have to sell out of Baba. So that would kind of put pressure on the stock price, and the underlying business would not have changed. Say it'll drop like another 40% from here. Baba goes to like 100 something. There is pretty much a buying opportunity in that sense. I know it looks bad in the short term because you might think that they have less access to that market and capital raising and everything. But I think Alibaba can raise money from the rest of the world, even if they're not listed in the US, like just being listed in Hong Kong.
Yeah, and Alibaba don't need to raise money. Like if you were going to be a long-term shareholder of Alibaba and the price went down, you would directly benefit from that because Baba have been buying back stock and they've just announced they're lifting that from like 10 billion a year to 15 billion a year, which is like, I think well over half of their annual free cash flow they're sort of plowing into buybacks at this point. So I agree with that idea.